Well, hello again, Solis Wealth family. Greg Solis here with our update. First on the family front, everybody's doing great. Nicole finally made it in town. She's pretty much been out of town all summer. She's been up in Lake Tahoe and up north, just doing some fun things, which has been good for her. But we've missed her, and I'm happy she's home. Emily, of course, is getting excited to head off to school here in the next few weeks. Hard to believe that's coming up. Jack's doing great, doing his thing, and Monica's cranking right along. So we're hot here in the desert, but we're enjoying our summer, trying to get away as much as we can and head to the coast when we can. But when we're here in the desert, it's hot. But I hope you're having a great summer. I hope you and your family are well also. Market wise, so we've had a pretty good rally here. Last week we had 9 days in a row that the Dow was up. That's a long time. That's hadn't happened since I want to say 2017 or so. So we've had a pretty big rally here recently. The Nasdaq is rallied back quite a bit. It's only off about 12% off of its all-time high. If you recall, it was down about 35% peak to trough. It's been recovering, and now the Nasdaq's only off about 12%. The S&P 500 is off right about 6% from its all-time high. So we're kind of getting back up there. The Dow is only about 2.5-3% off of its all-time high. So we're getting there. It's great to see some nice movements. Well, what happened? Why did this happen? Well, this is what the theme that we've been talking about for quite some time is inflation. Inflation finally started to come down. Thank God. We saw the consumer price index for the month of June go down to right about 0.2% for the month of June. That's fantastic. That's both the core, which excludes the volatile energy and food prices, and the overall CPI number, only up 0.2%. That means we're only annualizing about 3% for the year. If you recall, what I've been saying is that the Fed wants to get those prices down to the consumer price index down to about 2%. So we're getting really close. The slowdown is working. Higher interest rates is slowing down the economy, and that is causing prices to come down. That's what the Fed has been wanting to see. So we now believe that the Fed will most likely, maybe they'll raise it one more time in July, and then that should hopefully be it. And then we'll begin to see the rates come down, and that'll be a tailwind for the equity market. So the equity markets have been pricing this in. That's why we're getting these rallies. I think we're probably getting a little ahead of ourselves. I think the valuations are getting a little bit high right now. The price earnings multiple, forward-looking PE ratios are upwards towards 20 on the S&P 500. So that's a little more lofty. So I'd expect some consolidation right in here. We get these kind of run-ups, we need to consolidate. Those are pullbacks. We don't like them, but they have to happen. They need to happen to keep the markets healthy. We don't want to get irrational exuberance and see this market go above beyond what the fundamentals are calling for. But we see an economy that's probably going to slow down again towards the end of the year and into 2024. We see that recession being short and mild. We kind of have that Goldilocks period that we've been talking about, and it's kind of playing out. But the markets have rallied maybe perhaps a bit too much at this point, but it's nice to see. Interest rates have kind of leveled out. The 10-year Treasury came down a little bit with these new CPI numbers that came out. So we see interest rates kind of hovering right in here for a little while and then eventually coming down as the Fed begins to lower rates. So all in all, things look pretty darn good. Economy's still pretty strong. Labor markets look pretty good, but weakening a little bit. And we should start seeing interest rates come down a little bit over time. And of course, the equity markets have rallied. Earnings look pretty good. And so all is well right now. You could take a peek at your portfolios. They look a little better after 2022 being pretty brutal. So that's it for now. Any questions, concerns? If you need us, please never hesitate to call. You know we're here for you. My very best to you and your family. God bless.